All right, so what is on the table for this week? Well, we got some news late last week. Of course, we all know by now that the Fed did raise prime by 0.25%. And just based on everything that we're seeing, what we're reading from various economists and things like that, is that we probably have a couple more hikes ahead at most. So the forecast is still that the Fed is going to increase rates by about 5% total. So they have increased rates 4.5% so far, which means that we could have 2 more 0.25% rate hikes if the economy doesn't make any wild shifts. Like, for example, if inflation starts dropping rapidly over the next few months, maybe they will scale back and stop. But we just don't know what that data is going to show just yet. And of course, we had kind of a bizarre jobs report as well. It was, I believe, 517,000 jobs added against the forecasted 188,000. So like they say, if it sounds too good to be true, it most likely is. So there hasn't been a ton of weight put on that jobs report because it could be, the number of seasonal workers. There's also some speculation that perhaps some of these job postings are like zombie postings where, maybe employers had put these postings up a long time ago and they've been sitting stale. They're not really actual job openings. So there are a lot of variables that are making people not take this jobs report as seriously. So we'll know in the coming months if that number drops off a cliff. That would be very telling that there was definitely some, just like I said, seasonal jobs or things like that, just things that are not really common for the rest of the year. So we shall see what that means in terms of the Fed raising prime. Now, with that said, on the multifamily side of things, in terms of interest rates, as you have seen over the last week or two, we have seen rates pull back a bit. And that really is just a function of the fact that a lot of lenders were not that busy. So I would talk to a lot of our lenders. Some of them weren't lending at all. Other lenders would say, I have no loans in my pipeline. Other ones would say, I have 1 deal in my pipeline. So business has essentially really scaled back quite a bit for multifamily. There is some business being done, but definitely not enough to go around for everyone. So what I've been seeing is that a lot of my clients and investors that I know are kind of just taking a pause, because they don't really have to continue buying in this uncertainty. It's harder to, you have to come in with more cash on deals than you did before because of interest rates being higher. Cap rates really haven't come down that much. So people are just kind of in this wait and see pattern. Banks are kind of in that same pattern as well. As we know, banks hate uncertainty. They hate it. I mean, who likes it? But, so because there's uncertainty in the market, banks are also taking a pause. Plus, they're getting paid. They're making a decent amount on their money right now just sitting with the Fed. So anyways, they really don't have to take the risk right now with all of this uncertainty. So why would they? So that said, there are deals still being done. Lending is still out there and available. It is definitely changed. There are a lot of lenders that continuously are coming in and going out and changing terms and shifting. So there's a lot more shifts happening than ever before. At least for now, we've seen some shifts to our benefit, which means, because of rates dropping a bit, that should stimulate some more activity for people and make it more helpful when qualifying deals, getting more loan dollars and things like that. It's interesting because on the residential side of things, rates have already scaled back quite a bit. In fact, it seems as if the bubble already kind of burst last year when rates hit like 7.5% on a 30-year fixed for a primary residence. Since then, rates have come down pretty considerably, and it's been enough to spur activity. So for example, on the residential side of things, more in the entry-level homes, we're seeing multiple offers again. So it's not as much of a buyer's market as it was. It's still a buyer's market, but there is more competition again. So sellers are not having to make as many concessions, credits for repairs, things like that, because there is more competition available. And that is really in the more entry-level primary home space. But it's encouraging because that means that multifamily is more than likely kind of around the corner from picking up, that there will be deals to be had and things like that. So treasuries have scaled back some, and that is really helping to stimulate the economy. A lot of people that couldn't buy a house are now at least able, not having as much competition as they were before. So that is helping for them to get into homes. And it's encouraging news for us since we tend to trail behind the residential market. So, what else am I seeing in terms of deals? I am still seeing, more construction and maybe more niche products and things like that. People looking to pull cash out to be ready for buying opportunities. Those are the kinds of deals that I'm seeing right now in the market. There are some purchases, not a ton, just not a lot of deals trading. I mean, also the other thing too for us is that most of us locked in on really, really low rates for our apartment building. So unless we're desperate to sell, we can just hang on until the market turns around, which is a really beautiful place for us to be because obviously rents are still very good. Occupancy is still high. So we're still getting cash flow and we can wait until the market comes back, which is a great place to be as a potential seller to just say, you know what, I'm good. I've got my cash flow. I can just wait until the time is right. But it's not helping the inventory problem. So as rates do start to drop, that should help spark some activity in the market and get things going again. So have a great week, everybody. And again, if you want me to take a look at anything that you're considering, I'm happy to underwrite. It takes me very little time to underwrite deals since that's what we do every day. So feel free to reach out with any questions, any deals that you want me to take a look at. I'd be happy to help you out.